Good morning, everybody. Um, Today's the 13th. Welcome to the weekly meeting. Um, y'all know the drill. What y'all want to see? Like what y'all want to see? Let me know.
EAGAENGN. I posted it too.
EA. Oh, you did. Oh, let me go look at the chat. EAGAG EAGAENGN.
Hmm.
All right. EA. Um, EA. Let's look at the weekly. Looked like it tapped into, um, or at least filled in this gap. It pushed up, but of course, we were looking for price to pull back to here anyway and possibly sell. Um, so it filled the gap, it pulled back, and it's looking like it's probably going to start selling. So I would be looking for price to pull back into here for the sell. Let's see, based on the daily. Okay, so now that we've got the market structure shift, we had a break of structure here, and then we had a shift of this swing low here. That's the market structure shift. So this is the weekly order block zone. However, if price is going to sell, I would want to see price pull back a little deeper. I think that's probably around the 50%, 618. Yeah, this is 50% 618. Um, y'all know me. I would love to see it come back to here first. But these would be two premium zones for price to pull back to for a sell. Whichever one you prefer. Um, that's what I would choose from here to here. Oof, that's 200 pips. I'll wait. Um, so with that being said, prices broken or shifted the structure on the daily. There is a demand zone here. So this is probably where price is going to sell down to before pushing back, before pulling back. If you trade supply and demand, let me rephrase that. So I would expect price to come here and then turn around to either buy up to here or up to here. Either one is fair game as of right now. Of course, if it's if it does what we think it's going to do and this pulls down even more, depending on how far this goes down, um, yeah, this would be my zone here, the 78. So that's what I see for, oh, wait a minute, hold on. Let me go to the 4 hour. So based on the 4 hour, you have, you currently still have this 4 hour structure right here. So price can pull up and then sell down to that zone before buying back up. So it's already pushing up. So it can come here and then sell back down to the zone before buying up. But of course, if price shift structure, then there should be a pullback to then buy it up to one of these zones. But currently it's still in bearish structure. Any questions on GEA? All right. EN, go to the weekly. Let's look at the bigger picture. Okay, so we definitely are buying up to here, but we have to look at current structure, which is, so prices at this high here. The current structure is right here. This is the bullish structure, right? Price pulled back and then started pushing to the top side. So, and although there is a weekly bearish order block, there's also a weekly bullish order block. And price is bullish. So I would be looking for price to keep buying. Let's go down to the 4-hour. This is a 4-hour demand zone. 4-hour is currently still bearish. So again, you might get a sell down a little further into this zone. But I would definitely be looking to, or maybe it'll buy up into the zone and then sell. But right now it's still bullish. So I would be looking for price to buy back up to here, back up into the zone. Go to the 1-hour. Here's our 1-hour supply zone. So yeah, I would be looking for price to come in here and then start to look for the sell. For a possible sell, let's say that. So around 97306, it might tap. It may come give a double top or what, whatever, and then start to sell. But of course, if it breaks this high, if we get a break above this high, then I would look for a demand zone for the buy. Okay. Let's see. Let me go back to, you say GN, and EN. EN. I mean, GA and heck if I know. Let me go back. GN and EN. Okay. GN. All right, let's go to the weekly. The weekly is giving bearish. Gave a bearish order block. If you trade imbalances, it has tapped into a weekly imbalance. If you trade Oops. All right. So, oh, wait a minute. Hold on. All right. So higher time frame, we're in this bearish structure right here. We're in this bearish structure right here. So let's just fib the move. Doo-be-doo. Doo-doo-doo-doo-doo. Okay. And we have our 78 here and our 88 here. Just put those two right there. And of course, we have the weekly. In between is the weekly supply zone in between there. So current structure. Is still bullish. Let's go to the daily. So we'd have a little shift right here. But again, we're in a higher time frame structure. So I would be looking for price to, let's see what the 4 hours given. So this is our current 4-hour structure. We have this swing high, this swing low. So price would need to either break out of this high, or if you want to trade this for a sell, for a possible sell. So this would be the zone here. Let's go to the 1 hour. Let's go to the 15-minute. All right, so price has tapped in. Let me see. It's got to be something a little higher. All right, so price is currently in this structure. This structure, this is the current demand zone. So price is going to either need to break below this low for a continuation of a sell, or price is going to push above this high to continue buying up to this zone here. To continue buying up to this zone here. Hold on just a second, y'all. All right, I'm back. So yeah, I would definitely wait for price to either break below this low or give you an impulse move to the top side to continue buying. Any questions on GN? And then we said GN, and G. Why I can't remember what you asked. And
That was it.
E,
It was just
we
you
did
and them.
EN already? Oh, okay.
Mhm.
Yep. Sorry. All right. Let's see what else. AJ, let me just leave this chat box right here. AJ, bloop. Let's go to the weekly. Let's clear. All right. AJ, AUD. Um, Hold on, y'all. Okay, AJ. All right, so based on the weekly, we have this break of structure. All right, so I would be looking for a price to pull back into this demand zone. So we can narrow that down somewhere out there. And I'm just going to take it down to here. But based on the daily, you have a demand zone here, and then you have a demand zone down here. This one is not part of the discount, so I wouldn't recommend using that particular one. But if I fib the move, so if price did come here, then price is likely going to buy up to the 618. Price pulled back. Yep. So you can either wait for price if you want to get in a move to pull back to this zone to then possibly buy up for about 200 pips maybe. Well, that's to the negative 27. If it buys up to the 618, it's going to be about 362 pips. So this is what I would be expecting. So let's go to the 4-hour. 4-hour is still bullish, of course. Let's see, 1 hour. Yeah, it hasn't broken any lower time frame structure yet. So that's the structure there. That's the swing low, the 15-minute swing low. So it hasn't broken any structure yet. So and now it's buying up. So it could just be buying up some more or up to this zone. I would need to see it break this low, or if it's going to break this high, then this low is still going to be the same low. So right now, AJ is, go to the 4-hour. It's giving bullish structure. Yeah. I would definitely wait for price to pull back. EU. Let's go to the weekly. Let's look at the higher time frame. We see we're currently in bearish structure from here to here to here is the bearish structure. So price already tapped there. This is looking like the supply zone price may come back to. And based on that, on the weekly, we're still in this bullish structure. So let's go down to the daily. Let me mark that. Okay, let's go down to the daily. We did get an internal shift here. Or price pulled back to, let's fib this move. Prices pull back to a discounted area. So price could continue buying based on the daily. This is our last break of structure or internal break of structure. Let's see. So this is our swing low here. So price would need to break this low in order to look for more sells. So now let's go down to the 4-hour. All right. Based on the 4-hour price pulled back into and cleared your imbalances. Cleared this one, cleared this one. There's still, there are two demand zones on this 4-hour. So you have a zone here and then a zone here. Both would be in the discounted area. So, there was an internal shift here, but there's also a bullish 4-hour bullish zone here. So yeah, this one would be either wait for price to pull back here or pull back here or wait for price to break this high. Right now it's in the middle. There's nothing showing me up here. There's no order block. I mean, there's no imbalance. There's this order block, which has already been mitigated. Let's go to the 1-hour. Nothing. Let's go to the 15-minute. Yeah, this is just consolidating for now, so I wouldn't even trade this. But I would be looking for price to pull back to this zone and then see what it gives me. Or push up to this zone to see what it gives me. If it's going to push up there. All right. GU. GU. Weekly. So GU, based on the weekly, we had a market structure shift here. Okay. So now I will drill down to see where I want price to come back to here for the sell. If you're trying to get in the buy, it would need to close above this high first. And then look for the pullback to start buying. Yeah, that's what I would look for. Let's go down to the 4-hour. in this bullish 4-hour structure. I gotta figure out another word if I can. My time getting done. So this is bullish 4-hour structure. Um, that price has pulled back into. Go down to the 1 hour. It's about the same. Price shifted this internal structure. So I would be looking for price to pull back to this zone here to possibly continue buying. So this is what I would be looking for. And you have to put it below here because this is the actual swing right here. So this is the swing low. And this line right here is the swing high from over here. That's about 72, maybe 75 pips or so. And looking at the 1 hour structure, right? This is the current structure we're in, this 1 hour bearish structure. Price has pulled back to it. So it's probably going to sell back down into that. So, for my counter trend traders, you got a little some internal shift, but then you also have this zone here. So I wouldn't trade it. I would wait for price to come back to this zone or break some highs and then wait for a pullback. But again, we're in a 1 hour bear structure and it's already tapped into that zone and started shifting. So maybe price will pull back here and then you can get in the sell. This is what I would look for if you want to get in the sell. If you want to, I was about to be shady. I ain't gonna say that. I ain't gonna say it. But yeah, that's what I would be looking for. Price to pull back here. And that was it for Kai. Let's see. AU. I thought we did AU already. No? No. Okay. AU. AU. Weekly. Let's see. Our last internal down structure was this shift here that made this the swing high. Okay. So price is buying up into this area here. And right now we have a weekly break of structure. So if I were looking for a buy, so if this is the weekly break of structure, that makes this the swing low here. Okay. So if I were looking for a buy, I would definitely be looking for it from here. See if I see any market structure shift. Price is still bullish here. So price could pull back to this zone and then buy. Um, or price is going to break this low and then you can possibly look for the sell back down. But if you're going to do that, this would be the zone to buy from. Of course, taking it up to, that's like 62 pips. Yeah. Um, yeah, I would be waiting one, two. I would be waiting for price to pull back here. Uh, this is too high for me to be buying. Look for buys. It's already broke structure. So at some point we know it's going to start breaking swings. So for me, it's too high to buy. It's already broke structure. So I would be looking for a shift or for price to pull back to this zone for a continuation of a buy. Um, and I think these all are the same. Weekly. Okay, let's find the last swing. The last swing was here. Her price came here. It broke above this high. It closed above this high. So I would have definitely looked for price to pull back to the zone, which it did. And now it is pushing to the top side. But with that being said, we're still in this bearish structure here. So price could come up to this zone, whether you trade demand zones are imbalance and could possibly start selling. So for buying, I think you can buy it up to this zone. We have a weekly bullish order block from after this pullback that did not close below here. Okay. But I can still see there's a little structure in there. So I'm just going to go down in the time frame. And you have this bearish structure here, this daily bearish structure. Price is still bullish, not breaking any structure. So it's probably going to keep going bullish. But once price breaks this high, you can expect a pullback for a continuation of a buy. And then that would be up to this zone, which is about 300 pips. But I would definitely wait for the break of this high. And then if you want to trade, let's go to the 4-hour. All right. Currently in 4-hour structure, right? This is the structure. This is the zone. If you want to wait for price to pull back into here to buy, then that would be where I would look to buy. To at least take out this high and maybe even up to this 4-hour supply. So it's about 75, 80 pips or so. But yeah, this is where I would be looking to buy from up to, again, at least this high and maybe up a little further. Let's fib that move. Hold on. So from here up to here. Oh yeah, that would be perfect. Um, the 78 is there. Yep. I would be looking to buy it up to that zone. Any questions? Oh, UJ. Um, where the heck is UJ? It's there somewhere. Already there. Oh, here we go. All right, weekly. Why do y'all want to trade this? This has been consolidating for I don't know how many weeks. 1, 2, 3, 4, 5, 6, 7, 8 weeks. Consolidating for 8 weeks. So currently we're in this bearish structure. Price has tapped it and then started consolidating. So, and then here we have daily bullish structure. Price has not broken this low. Price has not broken this high. Since it's bullish, I would go down in time frame to look for a demand zone. And that's where I would be looking to buy from this zone here. Everything else is it's messy. Patience, patience, patience. Up to this high. Now, of course, if price breaks below here, right? Because we are in this bearish structure, then we'll get into a buy to then sell. But right now it's still in this daily bearish bullish structure. And it's consolidating for 8 weeks. But if I was trading it, well, I'm not even gonna lie, I got a limit set. This would be the zone. And again, there is imbalance and an order block here, but we're still in the bullish structure. All right, any questions?
I have a question. Hi, Kim. Good morning.
Good
On
morning.
GN, not this one though.
GN.
Mm-hmm.
Okay.
So if you go to the 4 hour, I'm currently in the buy, and I just wanted your opinion. Um, so let me see. So for me, let's see if I can draw price. I'll move over a little bit to the left.
Oh, to the left.
Yeah. So price, you can zoom in a little, right where your pink box is.
Okay. Gotcha.
Um, I don't know how to draw. Let me see. Okay,
Mm,
so
mhm.
so I got in based on this demand zone.
Okay.
So that's my entry where your red line is right here. It
Okay.
took out this. So this for me was liquidity. It came in, cleared it, tapped into demand. So I'm in the buy, although it didn't break any structure. I wanted to know your opinion
Mm,
on holding or.
so yes, it is still in bearish structure to the downside, right? So if I
Mhm,
go down in time frame, there is a little more, a few more zones. We've got liquidity there. So price could pull down to there. There's this order block here. And then if I go down to the 15-minute, there are more demand zones here. There's one here. This one pretty much has already been mitigated, but it could come down to there. So based on 15-minute structure, well, the structure is the structure. So even on the 1 hour, this is the structure, right?
mhm,
So price is buying up. So if this demand zone from here, from this 4 hour zone, is to be respected, it's going to break above this high.
mm. Okay.
If this structure here that we're currently in is going to be respected, we should get a pullback into this zone and then a shift in structure for the sell. But right now, as it's going up, this is your structure here, this little pullback here, and then this here. So this is the current lower time frame structure that hasn't been broken yet. So if price closes below here, then it's probably going to sell. But as of right now, we're still bullish into this zone.
Okay. So I'll probably set an alert below that low to review and get out
Yep.
where your green box is.
So
Okay.
I would say do a trend line, add an alert. Now I wouldn't do it on
Mhm.
the 15. You can do it on the 15 minutes. It's up to you. I normally do mine on the 1 hour and or the 4 hour. Um, but set an alert crossing down, bar close.
Okay.
So if you get a candle on the 1 hour to close down, to close below this low, then if
Break.
price closes below here and this demand zone, I mean this supply zone hasn't been tapped into, then this would be what I would look for. If it closes below, pull, and then I would look for the sell. But I,
Mm.
I'm the rejection from this zone is giving me um I don't think
So.
it's gonna sell, but I don't think it's gonna sell below here.
Oh, okay.
But I
Okay.
don't know what the market's gonna do. So I just have to wait for confirmation, and this would be a confirmation for me.
Yeah, because my concern was it started to slow down as far as the
Mm-hmm,
momentum
mm-hmm.
after it tapped in. So and then the market closed Friday. So of course.
So yeah, we're still
Yeah.
in the bearish structure though.
Okay.
And it has pulled back into a premium zone. So at any point it could shift structure. Or it could just keep going. You might get an impulsive move. If you get an impulsive move, then it's created a next level of structure, bullish structure. So, and what I mean by that is if you price has come here, it has pulled back. So if you get an impulsive move, now this is your break of structure, this is your swing low. So this could just keep going.
Hmm. Okay. Thank you so
Yep.
much.
You're welcome. All right. Anything else? Sean, you ready? You ready? That's my New York voice.
Yeah, I'm ready.
Okay. Do you want to take over the chart or
I got you on my phone, so I mean, if you don't
oh,
mind, I'll let you do it. I mean, I can pull stuff up on my own computer, but I'm gonna need you to do it for the benefit of the people.
okay. Where I need to go? What's the first one?
All right. Well, let me first. I mean, you can pull up the ISM chart, and if you don't know what that is, Kim, let me just hold on a second. I can pull it up and give you the ticker.
Is this
Uh,
it?
it's US. Where's my fucking glasses? Oh,
You need your glasses to find your glasses?
yeah, it's USBCOI.
USBCOI.
Right.
This one.
Hold on. Let me get bigger. Yeah, that looks like it.
Okay.
And for everybody that's just interested in trading currency pairs and all that kind of thing, I mean, you're probably gonna be bored with this. So
Wait a minute. That didn't hold on.
yeah, that's it. That's it.
But it's not letting me. Okay.
Just put it on the monthly. It doesn't.
It's on the monthly. It's not
Okay.
letting me use the candles though, but it's
Yeah,
using.
you don't need to use the candles for this.
Okay.
So anyway, what I was saying is if you aren't interested in macro stuff, then you probably just might want to check out. If you are, then hang out and I'll attempt to start trying to put some of these things together that we've been talking about for years. I know everybody's understanding is not in the same place. Okay. This is the ISM, which is the Purchasing Managers Index. Okay. So what this thing does is they survey, a swath of managers, CEOs in the country, and they get an idea of what these people are buying in their respective industries. And what this thing is designed to do is gauge the Main Street economy in the United States. Okay. So if you notice on the right hand side of that chart, it has numbers. And to me, 50 is kind of the magic number. When price or the line chart is below 50, you know, that means we're in kind of recessionary territory. What I've been told, and what I've read is when the thing is below 46, we're in a recession. And when it's, say, between 46 and 50, maybe we're not technically in one, but it feels like one to, Joe Main Street. And when we move above 50, that means the Main Street economy is doing better. People have jobs and they're buying shit and doing what typical people in the country do. So if you notice, this thing is sitting at about 48.7, call it 49. So, and it's pointed up. So the reason I'm pointing this out is because we got this interest rate decision coming up next week. And I think Jerome is going to cut rates. I think a lot of other people think that Jerome is going to cut rates. Okay. So if Jerome cuts rates and he continues to cut rates, in the next few meetings, we should see this ISM move up towards 50 and eventually past 50, and the Main Street economy will feel better about themselves. So I'm pointing this out because people don't understand how the fundamental matters, or if they do understand it does matter, they don't understand how to connect it to the charts, trading and investing. So the ISM is going to measure Main Street economy. The stock market charts, the S&P, the NASDAQ, and to a lesser degree, the Dow Jones, they measure the stock market economy. So when people say the economy is bad, they're probably mainly referring to Main Street. But that's not necessarily going to be the case on the charts, on the stock market charts. So just always be aware of that, you know. And I've talked about liquidity on and off for, I don't know, the last 2 or 3 years. Uh, some of us, I guess, maybe don't know what liquidity is. Some of us believe in it, and some of us don't. So, Kim, if you can pull up, just pull up the S&P if you don't mind, and you can leave it on the monthly time frame.
I'm sorry, what you say, Sean? I had to leave out real quick. I had to run
Uh,
out real quick.
pull up the S&P, and you can leave it on the monthly time frame.
Okay.
Uh, Go back to the ISM just real quick. I just want to point something out.
What was it? What was it again?
USBCOI.
Let me save it.
Okay, so Kim, kind of go back to the 2021 peak. Kind of put your cursor on that thing.
Mm-hmm.
So the ISM peaked. I don't know what month that is. Maybe Kim, you can tell them what
March.
March of 2021. The
Mm-hmm.
ISM peaked. And since March of 2021, it has gone down and it bottomed, it looks like at some point in 2023. Okay. So just note that time, that time frame.
March
Okay.
2023 at bottom.
Right. Now you can go back to the S&P. Okay. Go back to the last bottoming, like between October, I think 2022 to like
Right here.
December. Yeah, that bottom. Okay. That was the last bottom, the last real bottom in the stock market economy.
Mm-hmm.
And really it's the bottom of the real market economy too. But if you notice where the stock market chart has gone up from say January 2023 until present day, the ISM has kind of gone sideways from 2023, 2 years later, coming up on 3 years in 2026. But the ISM has gone sideways.
Mm-hmm.
Stock market has gone up. Okay. So what we also know is Jerome Powell started hiking rates. I believe it was January of 2022. And in January of 2022, I believe that's when the stock market fell. And we already know from that ISM chart that it peaked in March of 2021 and it started creeping down. And it has never recovered. So what I'm trying to illustrate here is the effect of hiking interest rates. When you raise interest rates, it kills mainstream economy. The mainstream economy, and when you leave them high, the mainstream economy can't grow because it's made up of small businesses that have to borrow money, and they won't borrow money and can't borrow money at elevated interest rates because the margins don't work. But if you notice in the stock market, even in a high interest rate environment in January of 2023, it took back off.
Mm-hmm.
And the reason it took back off is because they have eased financial conditions. They started easing financial conditions in January-ish of 2023. They printed money in some cases. They've moved money from the reverse repo and bought bonds. They've done different things in the background to ease financial conditions. When you ease financial conditions, that is increasing liquidity. And when you increase liquidity, markets, assets, especially assets that are not dependent upon interest rates, they're going to go up. It's why I always say rising tides lift all boats. Now, every company in the stock market is, let me rephrase it. Many companies in the stock market are dependent on lower rates. But if you notice, or some of you may know this, some of you may not, you know, most of the stock market's growth over the course of the last, I don't know, 3-4 years, the companies that are responsible for it are the Mag 7 companies, tech stocks. Those companies are not dependent on interest rates the way mom and pop, small businesses down the street. So those companies have drugged the market higher over the course of the last few years. If Jerome cuts rates and we go on an actual rate cutting cycle moving forward, the rest of the market will participate. And when the rest of the market participates, you should see that ISM that we showed, it should move up, and you should see the Dow Jones not trade so erratically. And you're just going to get a broader, you're going to have a lot of catch-up trades, from companies that have not performed to this point in time. And I just want to point out a couple of ticker symbols. There's going to be many more, but I just want to kind of show you what I'm talking about. So Kim, if you can pull up FBIN. You might need to put that thing on stocks.
Is it?
Yeah, that's it. Okay, hold on one second. Okay, Kim, you don't have I got mine on the daily chart. Let me switch to the weekly. I mean, it probably doesn't really matter which time frame you have it on, but I guess go ahead and put it on the weekly and put your 50 and your 200 moving averages on your chart.
Oh, they deleted off my chart. Oh, darn. Hold on. 50 indicators. Moving average. Simple, right?
Yeah,
And then you said the
the 50 and the 200.
50. And then another one. $200.
Okay. Warren Buffett once said, and you can probably Google it or chat GPT this, that if all people did was just buy stuff when stocks hit their 50 or their 200 period moving average, whether that's 200 day, 200 week, 200 month, they would make a lot of money. So if you notice with this company, and this is some construction style company, which means it's tied to the real economy. If you notice, this thing has been kind of straddling the red line, which is its 200. And right now it's trading below its 200, but it's coming back to the 200. If we get those interest rates, my guess is this thing is going to go back above both the 200 and the 50, and it's going to move higher. But I'm pointing out that this stock has been in a buy zone since really May of 2022 for the most part. So if you're interested in investing, when stuff approaches the 200 moving average and maybe trades below it, you're in an accumulation zone to buy this stock or whatever stock is trading below that 200. And when the financial conditions are right, the stock will move higher. So this is one, I don't know the time frame, but this is one that is a buy, in my opinion. Kim, type in ticker symbol MAS. Okay. MAS is similar to FBIN, but if you notice, it's already moved above both its 50 and its 200, but it still will move higher. So the point I'm trying to make and illustrate here is these are real world companies that aren't tech stocks that are divorced from the real economy. These last two ticker symbols that I've showed are companies that are tied to the real world economy, and I just find it interesting that they're starting to show signs of life. And we got this interest rate decision, coming up next week. Um, we'll pull up one more ticker symbol OC.
Owens Corning.
Yeah. So looking at OC, you see kind of the same type of action. It's above the 200, and it's getting ready to get on top of the 50. So it's another company that's screaming buy. you know so Kim, pull up Apple, and after we talk about Apple, you can pull up Tesla.
Apple. I think the last time we talked about this one, we were looking for a pullback to keep buying.
Well, we might not get that pullback.
True. I mean,
So
it did, you're right, because it did break structure here, right? And if y'all notice, I'm marking these up based off of technicals, right? Sean knows the fundamentals of everything. This is my swing low. So, but if you trade the way you know how to trade, this is swing low. The 4 hour. So based on the 4 hour, price has pulled back to a demand zone and has moved out the building. So for Apple, if you want to, I guess, and Sean can tell you this, buy stocks in Apple, you're probably going to get a pullback, whether it's into this imbalance that it has created, this 4 hour imbalance, or pull back to maybe this demand zone to keep buying.
so I'm showing you some real world companies, and I'm showing you stuff like Apple, because Apple has been lagging, but you see Apple starting to make a move to catch up. And also pull up Tesla real quick.
Tesla. I know I have it in here somewhere. Oh, I did anyway. Oh, that's why. Okay.
This is a weekly chart.
Right here.
So Tesla's been in an accumulation zone for a long time, going all the way back to 2023. It's pretty much been consolidating along that 200 moving average. It's broke above the 200. Now it's skirting the 50, and it's broke away from the 50. The chart looks a lot like Apple's chart, really. So the bigger picture here is there's a lot of talk about the economy is going to crash, the markets are going to crash. None of the charts suggests that the markets are going to crash. And we know we're getting an interest rate cut, which is going to ease financial conditions, you know. So, in my humble opinion, we're not going to have a crash. And I'm showing you a few charts, and there are many others that all are saying I'm going higher. So, we know about the big, beautiful bill and its inflationary handouts. We're not going to crash if they're handing out billions of dollars. We literally can't. If Jerome cuts these rates, making money cheaper, I don't see how we crash when the price of money goes down. So if anyone out there, is concerned about a crash, I don't know what to tell you. I could be wrong. I don't know everything, but nothing suggests that we're going to crash. Look at the ISM. It's been below 50. I don't know what the last 3 or 4 years, 3 years, 4 years. It's 2025. It's been below 50. So it's already been in recessionary territory. Where are we crashing to would be my question.
Mm-hmm.
So that's how I interpret the fundamentals and tie them to what I see on the chart. There's something else that I've heard about, a long time ago that I use that I call the financial conditions index, and it's pretty much dollar, metals, rates, and oil. So, and what that means, if the dollar's down, I already know, okay, dollar weak, real assets should go higher. If rates are down, that means dollar weak, money cheap, real assets should go higher. If oil is down, that means energy's cheap, inflation maybe isn't as low as we want, but the lower that oil is, that means the lower the inflation should be, better for, the real world conditions. Assets should go higher. And metals, silver, gold, copper. Uh, Kim, pull up XAG because we don't have to pull up gold. We already know what the hell happened with that.
What am I pulling out?
XAG, it's silver.
Oh, silver. Um, so silver is um
Well, it looks like a cup to me. we haven't got the handle yet. Maybe we'll
it's
get it.
still bullet. It is still it.
Yeah, it's very bullish. It's very bullish. It's going to go higher. Now, maybe next week you get a little bit of a handle. I don't know. I can't trade every wiggle in the chart.
What's the cup though? When you say see
Okay, Kim, go to the 2011 high. The 2011 high. And think of a coffee cup. Go to that high, that peak on the left. Put your cursor on the high, Kim.
Oh, I just put right here. It's right here. I
Yeah.
put these.
Now trace that price action down from that high.
Oh, wait a minute.
Trace the price action down along the bottom and all the way back up to where it is now.
Okay.
And you don't have to do it necessarily with that thing because it's not going to give you the
Oh,
curve.
I know what you want.
You
I know
see
what
the
you
curve in the chart.
I know what
That
you
looks
want.
like a coffee cup, does it not, Kim?
No, no.
Or a bowl.
I
Does it
don't
look like a cereal bowl?
I don't drink coffee, so I
I
don't
don't either, but I know what a coffee cup looks like. Now, if you get right, there you go.
Ah.
Now, if you get some downward price action, maybe over the course of the next few days or weeks, you know, that's your handle.
Okay.
So when you get your cup and your handle, you're going higher. Now, if you measure, if you get that trend tool and you anchor it on the bottom of price action in the bottom of that cup, and you raise it to the top of that cup, now you take the bottom of that stick, you pick up that stick, and you anchor it at the top of the cup, at the neckline of the cup.
Mm-hmm. Yeah.
And wherever the top of that stick is, that's where price is going. It may go higher, but
Mhm.
that's telling you that's where price is going.
And just for those for my beginners on the call, your price was bullish. This was bullish structure, right? You feel from here to here, price has pulled back to the 88 right here. So price is likely going to the negative 27 and the 6 and or the 618. Just FYI.
Kim, do the exercise. Pull that trend line thing out. That stick that's going to give you the two circles, and put it on the bottom of price action.
Wait a minute, which one?
That tool on the left, it's in the first or the second.
Right here?
No, up higher. It's the trend line,
Okay. And
but anchor it on the bottom of price action. Come over into the middle of the cup. No,
right.
no, no.
Oh, I never mind. I'm sorry. I'm
We did
sorry.
this
I know,
before.
I know, I know, I
Just
know.
anchor
I
it
got you. I got you.
right. So then pick up the entire stick and
That
put it on that bottom red line.
wait a minute, hold on.
There
I
you
want
go.
I
Now,
want to copy and paste. There we go. There we go.
okay. Now the top of that stick is where price is going. It may go higher than that. So pull up the Bitcoin chart.
Okay, this is my last one because I gotta go. I gotta
All
get
right.
out of here.
So get that trend line tool.
Trend line tool.
You see that cup and that handle on this Bitcoin chart. Get that
This
trend line
one
tool. Now put it
or
in the
this one up
bottom.
here?
Hold
The breaker
hold on.
structure.
Stretch it. Yes. Now pick it up and put it on top of where the invisible neckline is. Price is going to the top of the stick, and it's probably going to go higher.
And
So,
because has tapped the 618, which is a sign of reversal, you'll probably get the pullback for Bitcoin to might get a little pullback to here to then keep buying up. FYI.
so Kim, I know you're trying to leave, but pull up.
There you go.
I mean, who I'll just ask this question, and I guess we can go, and maybe we can pick it up next Saturday. I mean, who wants to learn how to trade options? If you want to learn how to trade options, just I guess let Kim know or show up next week, and I'll ask again, and we can talk about that, because there's opportunities in the stocks. If you want to learn how to trade options, there's opportunities. So I'll just leave it at that. Um, so, all right, Kim, I guess you can go.
All right. Anybody got any other questions? A few people say they interested. So next week I shouldn't I should be able to lead the pack. We might have a special guest next week. We'll see.
All right. So I'll I'll teach. I'll introduce everybody to options, next week. I don't know everything about it. I know enough to make money on it. I don't know the entirety of everything. So, but I'll teach you what I know. I know enough to make money with it. So, but
Well,
anyway,
you to know.
we'll pick it up next week.
All right. All right, y'all.
Thanks, Kim. Thanks, Sean.
Thank
You're
you both.
welcome.
You're welcome.
Thanks, Kim. Thanks, Sean.
Not
Thank
gonna be
you.
All right, guys.
Dylan.
Sorry, I'm here.
No, I was just saying, hey, I hadn't
Oh.
seen you in a while.